Hey, this is Matt from InvestiQuant. Today is Friday, September 25th, 2020. And yesterday, we saw a fairly volatile day in the market, seeing trading happening, aggressive trading happening from both sides. Early on, buyers were quite aggressive, and then in the afternoon, the sellers stepped in pretty aggressively. We had about 70 points of range in the S&P. Nice range happening here recently. Heavy volume, but a volatile session here at recent lows has been taking place. Today is Friday. We are about to end the week, and the overnight session has been trading down. So what I want to do today is take a look at what has happened historically on Fridays when gapping down in the prior day range in a weak bull environment like we're in right now. So let me set this up in Discover using all four instruments. The setup is going to be based upon getting long at the open, which is 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time. Then I'm going to go into the opening filters section, and I'm going to say that we are opening below the prior day close, but still above the prior day low. That's currently where we are trading right now at the time of this recording. Of course, this could change before we actually open. In fact, it's been a little bit volatile coming into the open here in the recent weeks, but we are currently trading down within the prior day range. So I'm just going to go with it here. And if we don't end up opening down in the prior day range, you can always come in here and adjust this in the opening filters to zone in exactly on where we are opening at today. Then I'm going to go into indicators. I'm going to set up this weak bull market, and I'm going to do that by saying we are under a 10-day moving average, which you can see over here on the far right. Scroll down to say we are above a 200. Just click on both of those. Those are true, and then I can go to the calendar. I can see that it's Friday. I'm just going to click Friday over here on the far right-hand side. That adds it to the test, and then I can click View Results. And here we go. So these are the results of gapping down within the prior day range on Fridays when below a 10-day moving average and above a 200-day moving average. Historically, we've got 49 samples in the S&P dating back to 2003. The NASDAQ, 63 samples. The Dow, 60 samples. The Russell, 60 samples. And looking at the win rates, the S&P, for whatever reason, has been quite weak in this scenario. 35% of these have closed above the opening print. Now, the NASDAQ's been a little bit stronger, 48%. The Dow, 43%, so that one's fairly weak as well. And then the Russell, 50-50. And if you look at the average win to average loss, you'll see the average loss is larger than the average win here in the S&P, in the NASDAQ, slightly larger here in the Dow, and then larger in the Russell as well. So none of the win rates are bullish, and all of the average losses have been bigger than the average wins. Now let me click on this View Results Distribution, and I've got the S&P selected here, and I'll show you the results distribution for the trades that are within this backtest. And you can see the trades are plotted on the vertical bars here, and the taller the bars, the more often it has happened. We've got P&L and dollars marked across the bottom, with this based upon one contract and $0 right here dead center in this black line. So everything to the left, a red bar, is a losing trade. Everything to the right is a green bar. That is a winning trade. And if you look at this, the one thing that really stands out to me is the outliers on the downside have been the most common scenario here. So we have had more large outliers on this day than any other scenario. In fact, you normally see the taller bars here around the middle for the setups that we look at. This one, the tallest bar all the way over here on the left. So lots of outliers here on this day. And on the upside, there's a handful of outliers, but not nearly as many. So historically, there has been some risk to the downside on Fridays in a weak bull market when gapping down in the prior day range. Hopefully you found that helpful. Good luck today, guys. We'll see you next time.